Hello, everyone. This is the Hyperwave podcast. I am Socrates, joined by Tyler Jenks, and today we are going to be taking a look at Bitcoin as well as the stock market, and also we'll be taking a peek at gold to see what's going on there. So today is an absolutely beautiful day here in the Rocky Mountains. I've been getting my garden dialed in here over the last few days, and that's getting me very excited about what the summer holds. So how about yourself, Tyler? How are things going for you today?
Yeah, great. Been very busy today, but it's a beautiful day in Chattanooga. Um, Surprising things in the market, I guess, to me, maybe not to other people, but we really looked good overnight in the stock market, and then it kind of turned around going into the close. Bitcoin did just the opposite. It dropped, and then all of a sudden took back off to the upside, but couldn't make any headway. And gold is just messing around. So I call that a stutter step, like in basketball or anything else, kind of a false step and then backwards. That's what markets often do. So we want to take a look at it and see if we can make out anything that we hadn't observed the last couple of days. We'll start with Bitcoin. And Socrates is going to jump in because he's the closest to this recent action on the shorter term time frame. So let's see what you've got.
All right, my pleasure. Pulling up a chart now, and then I will be throwing on screen share. So just one moment. Move that over here. Oh, almost clicked the stop broadcast button. Thank heavens we didn't do that. Okay, sharing screen now. And let's see, good, it did. Keep the lines that I had drawn. So we've been taking a close look at this 4-hour chart over the last couple weeks or so, and there's been a number of very interesting things that have been had my attention, had me sitting up in my seat here. So the first thing that I am going to get back on this chart is that parallel channel that we are looking at, that I am very intrigued by this recent action, which was able to break through the top of it. So let's just go back through what we were looking at yesterday. We had bounced from this horizontal area of support that was at 75 to 76.15. We closed every candle on the 4-hour chart above the 200 EMA before bouncing back up to test the 50 EMA for a second time. And yesterday we were looking at these candles in here. We had gotten a close above the 50 EMA, and then this had quickly reacted back down and was trading below that candle as well as below the 50 EMA. And in this area here, I had mentioned that I was expecting a little move like this, which essentially is due to the second time we test the 50 EMA on this action. We break it down, we come and test the 200, and then we resist the 50. That second time that we test it, I expect to see this resistance hold once more and for these MAs to tighten a little bit more. I'm used to seeing a couple tests up here on this shorter MA while price consolidates in between the long-term moving average and the short-term moving average. I use EMAs. Whatever you use, they're all moving averages at the end of the day. So you have to go with what you think is best, and the 50 and the 200 are what I use for my medium and long-term moving averages. So here's what I was expecting was a pullback down to retest the 200 EMA and throw back to retest the top of this bear channel. And that is almost exactly what happened. Not quite, though. We didn't actually end up getting back to the 200 EMA, nor did we actually test this trend line, throw back to that area. Instead, we found support slightly above it. I had the line drawn like this. So instead, we found support slightly above it at around the 7,700 area. And then we quickly closed back above this 9 EMA. So we're in a situation right now where the bullish scenario that I had lined out is playing out very nicely. That bullish scenario was back in here when I was expecting this to break down, and I was expecting further move down to like the 68 area, but I was also preparing for the alternative. And what happens if this area of support holds? That was the question I asked myself. And that's when I drew these lines like this. I said, if this holds, and I think we're going back to retest the 50 EMA on the 4-hour chart, that should hold up as resistance. We should throw back to this area, which I would then expect to hold as support. And then from there, I would expect this area of resistance to be taken out, and a retest of 9,000 would be my most likely outcome. So that has been coming together here quite nicely. And this is a great example of why I think it's so important to be preparing for multiple outcomes, to be not married to one position. Right here, I thought that this was going to break down. I was seeing a bounce here leading to a breakdown here. But I wasn't married to that. I was staying open to other possibilities and trying to determine, okay, if that doesn't happen, then what's my next most likely outcome? And that's what this was here. And we have step by step started to see that come together. First, we closed above the horizontal support. We closed above the 200 EMA. We broke through this trend line that was the bear channel. We closed above it. We then tested this 50 EMA. It held as resistance. We threw back, almost retested this trend line, almost retested this 200 EMA. Not quite. To me, that's kind of bullish, seeing that support moved up a little more than would be expected. And now we are back up here retesting this 50 EMA. So what to do now? There are kind of a few different options here, mostly on the bullish side. And that is going to be depending on whether or not you're the type of person who likes to go for the best possible price, or if you're the type of person who likes to go for the highest probability outcome, the highest probability trade versus the best possible price and the best possible risk reward. Those are generally two distinct approaches. I am all about risk reward. I'm, for the most part, always looking for risk reward, and don't care as much about probability. If something only works 20% of the time, but it's given me a 20-to-1 risk reward, well, that's something that I'm extremely interested in, and I'm not really trying to put myself in positions that are less risk reward but are going to work out more. So those are kind of the two sort of mind states that are both very valid, and each is their own. And this is where Tyler and I actually will disagree for the most part. He's usually waiting for the highest probability and waiting for the most confirmation. So here, let's look at what could we have done in here. And I mentioned that a throwback to here would be a buying opportunity. Testing this 200 EMA, which is in line with this horizontal support, which is following a breakthrough of a trend line. To me, that's a very interesting opportunity to buy because we broke this trend line. Now we're throwing back and we're testing a bullish moving average, which has been holding as strong support. So that's my kind of entry, is that right here, if I'm getting in here, it's going to be less probability than the alternative, but the risk is going to more than make up for that in my mind. So buying down in here means that I'm only taking on very minimal risk. If the price does end up breaking down the 7,500 area, I'm getting out, and my entry is at the 7,650 area or so. That's only a few percentage points away, very little risk. Whereas, I mean, the upside, this 9,000 target is like insanely conservative. If you're thinking that this is a bull market and Bitcoin is on the next bull run, then I absolutely would not be taking full profit here. I would be looking well above that. So essentially, the risk reward, even with the most conservative sort of outcome, is very favorable. And to me, that's what matters most. If I'm always taking 5-to-1 risk reward ratios or better, then I only have to be right like 25% of the time. And anybody, you know, with a coin flip can be right better than 25% of the time. So for me, that's really what I'm focused on. Did I buy it in here? No, I didn't. The reason being is because I already bought this area back in here. This price was testing this area of support, and I bought in here, and I don't like loading up in the same sort of price level. When we're back in here testing the same area of support at an area that I already bought, I'm really not interested in buying again at the same sort of price level. I already made my entry here, and this is offering the same basic sort of risk reward, same basic entry. So I really don't like adding on in the same sort of area that I already entered. I prefer for the price to really move in my favor before I'm adding on too much, or if I'm looking at really buying a dip, if it breaks down further and I want to improve my cost basis, that would be the other time where I'd be looking at adding. So something like a breakthrough of this market structure here, like a breakthrough of 8,000, and then another pullback to the 50 or the 200. That would be something that I would be interested in buying, even though it's a worse price point than here. That's okay, because I already got that price point, and I want it to move in my favor before I'm really, really adding on too much exposure. So that would be sort of what I would be looking at. That's why I didn't necessarily buy in here. I might have missed it anyways because it didn't pull all the way back to my area that I was looking at. I would have been looking at about 76.50 to 60, and likely would have missed this since that came on one candle pretty quickly. So that's what can happen if you're being patient and picky. Often you'll barely miss a really good entry, and that's quite all right. You have to be okay with that. So what's the other alternative if you're the type of person who is more interested in highest probability trades and less concerned about getting the best risk reward? So that person can be waiting for some final confirmation here, and hopefully you guys are starting to think about this for yourself, and you're starting to see, okay, what confirmation could I be waiting for based on the system that I've been showing you guys over the last couple of weeks? What should you be waiting for in here as an area to buy that's a high probability opposed to better risk reward? Well, there's two things that I'm seeing. First thing and primary thing is this 9 EMA and the 50 EMA. We want to see if those if that gets a bullish cross, this 9 EMA crosses above the 50 EMA, then that will likely be a fully bullish setup based on Consensio. You would almost certainly need the price to be above the 9 EMA for that to happen, and you would need both of those to be above the 50 EMA for that to happen. And if that does happen, then this 50 EMA is likely going to flatten out and probably even start turning up. Right now, we do see that it is slightly angled down. If we put our cursor over, it gives us a horizontal line, and we can see that that 50 EMA is still slightly angled down. So that's what we're looking for here for the next confirmation, and potentially this would be an entry signaled if we get this crossing the 9 EMA, crossing the 50 EMA, with the 50 EMA flattening or turning up. That is a buy signal. And the second thing that I would be looking for is this horizontal area of resistance. We notice the highest close we've gotten on the 4-hour chart is at about 80.16 or so. And I would be very interested to see basically not only a crossover with the 9 and the 50 EMA, but also a close above what we've seen here, these kind of wicks. And I might even adjust the box down a little bit, something like this, because if we even get back and retest this above 80.50, then that would be another area. If we can take out this sort of high in here, that would be a fractal. Those who are familiar with Bill Williams fractals, I am very intrigued with, and actually I'm incorrect. No, that sure should be. I only have the down fractals up. I apologize for that. Get those up fractals going. So here we see this fractal here. We've got a high in between two lower highs. Anytime you break a fractal, that's a buy signal based on the Bill Williams fractal system. So when we're looking at testing horizontal areas, or we're testing resistance while Consensio is giving a buy signal, that's when I want to look for additional areas of confirmation. So this is the strategy that's not looking for the best price, buying the pullbacks and buying when it's really moving down. This is waiting for confirmation. So we're waiting for the price to get above the 50. We're waiting for the 9 to cross the 50. But if that happens while the price is still right in here in the 8,000 to 80, 50 area or so, it's time to wait for more confirmation. I would be waiting for this fractal to get broken as the final confirmation, and would even be thinking about setting a stop buy order at about 80.76 so that you don't have to sit there and wait for it. Fractals, they don't need to be closed above to be broken. They just need to be violated even for a moment. And let's take a look at how well these up fractals have been working, even on the 4-hour chart. Notice this one here, it was at 81.32. The next time we get up, we fall just short of it by only about 25 bucks. 81.08 is where this comes, just shy of that. Now here we get another one that's just shy of this one, 80.57, another about $50 or so, that this comes up just shy. So notice how if you're using these as areas of confirmation to go long, or as this is your stop loss for a short, notice how well it has been working. As the price gets up and challenges that area, each time it has created a lower high. So if that happens here, we don't really want to be buying, as if we get another lower high that gives us another fractal, we don't really want to be buying that, even if it does close above this 50 EMA and potentially even lead to this buy signal crossover. So in this situation, if I'm looking to add, since I already bought this area, I may be interested in this, looking at a high probability long as a way to add. I'm not necessarily waiting for the pullback here, but if I do think this market structure has broken with a close or a break above this Bill Williams fractal, not a close, I apologize, but just a break above that, then that is signaling to me that we have broken this down channel, we have supported a throwback, and we've created a higher low and now a higher high. If we get this higher low and higher high, then that is the final confirmation that I'd be waiting for to say that, yes, I really am very confident. I really am thinking that we're returning to 9,000. However, right now, still a little too early. Here was where we take the good risk reward entry, but if we're really waiting for the high probability entry, now is too early to be saying that, even though it does kind of look like we have supported here and we're turning around. We're actually in the process of establishing a down fractal here. We just need one more candle above here, creating a higher low. So it really does look like we are turning around, but it's still just a little too early. I wouldn't be making a confident prediction from this area, nor would I be buying this area. But if we just get a little bit higher, then it's really looking like the dominoes have fallen and that the bulls have won this battle here. So that's my analysis on the shorter term charts. Anything that you see there, Tyler, or do you want to take over screen share yourself?
No, this is good. Let's stick with your chart. And I'll take the other side because I think you did a great job of looking at the bullish case, and it's my bearish case would be, first of all, that all we need to do is drop basically below about 7,600, which isn't very far away, and a lot of things happen at that point. We drop below the upper parallel line, we drop below the long-term moving average, and we drop below support across the bottoms that yesterday, I think I was correct in saying it looked like a small head and shoulders, but it no longer is. because 6 candles ago, 7, 8, 9 candles ago, we actually went higher than the head on that, and we're well above what the left shoulder looks like now. So I wouldn't call this a head and shoulders any longer, which is actually a little bit more leaning to the bullish side. But on the bearish side, below 7,600 is a very clear sell for me, because then I think you've got the possibility of testing the lower parallel channel, which is down in my target area of 6,600 in terms of buying some more positions. And I'm not particularly interested in doing that until that occurs. Now, if either of those bullish outcomes take place, I'm looking to be a seller up around the area that I sold before, which is about 8,800 of the other half of the position I have, because I just see too much overhead resistance above that 9,000 to 10,000 level, that I would rather stand on the sides and wait for the price to be able to prove to me it's going to get through it, and then buy on the other side of it. So I'm in the middle here, almost exactly half at the 7,900 area. I think we've got possibility of 1,300 to the downside. We've got about 1,300 maybe to the upside, maybe a little bit more. So I'm kind of uninterested here. I don't want to sell anything more here. It's not high enough. I don't want to buy anything. It's not low enough. Now, I'll throw that back at you just for a second, Socrates, in terms of what would it take for you to become bearish with this pattern as it now stands?
Pretty much couldn't agree more with what you're saying there. This area of support, I do not want to see tested again in terms of if I'm looking for a bullish continuation. I really would actually want to see this area right here hold as a low to provide a very nice higher low after challenging these highs, would give us a signal of strength. And I do agree, if we come back and retest this 200 moving average after we have gotten a bit of a squeeze from these, and the 200 has held as support 3 different times, if this does come back down, I would be feeling quite confident that we would break down and continue lower. And then one other thing that I could, a bearish kind of perspective I could provide, and one of the issues with trend lines is that they can often be very fickle and often need to be adjusted as new information presents itself. And some people have a real problem with that and therefore don't like trend lines at all. And I myself just don't have a problem with that. I'm fine with making adjustments as new information presents itself. And that has kind of been what's happened here. Something to keep an eye on is that maybe the channel was drawn incorrectly to begin with. And we are seeing some, if we connect basically the top of this wick, May 30th, to the top of the wick on June 2nd, now we're getting some very interesting information that we're seeing here, where these wicks have all come up right about to it, just a little bit off. And then we see these lower highs coming in here, coming off of that trend line. So potentially I was drawn that incorrectly originally, and this needs to be adjusted. And I'm fully on board with Tyler in the sense that always use the most conservative option. If there's a trend line that is the most conservative, so we had my original that looked good for a number of reasons. We really want to, if we're using trend lines and we know that they can be needed to be adjusted on a regular basis, then we should potentially use multiple, you know, and have this one as the area of, okay, well, this one's still intact, and there's no way to draw a more conservative one than this top one right here. There's just no way that any information could really happen. If this one gets broken, then this channel is broken. This is the most conservative bear trend line for this area that you could really draw. So I really like keeping my eye on the conservative option there, while still wondering if this really did break or if this does need to be adjusted. And then one more thing that I wanted to talk about, I kind of briefly mentioned yesterday, but I could probably do a better job of today. And let me get a clean chart up here. And that's, I'm wanting to take a quick look at the Wyckoff pattern that we see developing right in here. So I've got a schematic pulled up that hopefully we can get it all on the same screen, and so we can draw it nice and neat right next to each other. So you're gonna have to tell me how well you can see this. It looks like it is awful small. Hopefully you guys can see this okay.
Yeah, that looks fine.
All right, great. So this is schematic 1 of Wyckoff accumulation. Right here, this is basically going to be preliminary support, selling climax, automatic reaction, secondary test, and then secondary test in phase B. And we've got that pretty nice right here. Selling excuse me, preliminary support, selling climax, automatic reaction, secondary test, and then we have right here what you get after the secondary test. You move up to retest resistance, where the preliminary support and automatic reaction occurred. So that's right here after the secondary test. And then you get this creek where the price just moves pretty much in a straight, it moves down, and then you get a significant drop. So is pretty much what we're seeing here. Is we moved back up to retest resistance, and then we got this creek where the price started moving down, and then it had this little drop at the end, which can constitute as the spring. You want the spring to be below the selling climax in the secondary test. That's the ideal spring. That's an ideal bear trap, and is what triggers a lot of stop losses before it eventually takes off. That's not what we had happen here. It was a bit of a higher low, but still it followed the creek and retested support. And seeing that it didn't break down here, that's a little bit of a signal of strength to me, since it wasn't able to break down support and take out those stops. A little bit of a signal of strength. And then right here, we have the signal of strength where it jumps the creek. So you jump the creek, and then you get a signal of strength with a higher low, which is last point of support, last point of support. And these two last points of support, according to Wyckoff, are generally the best places to enter. You want to wait and stay out while all this is happening, and then entering here and entering here are what he prefers. So that's why this area really is important to me. Is we jumped the creek, and you want to see this is a beautiful jump of the creek, a big candle that breaks through that sort of trend that was created by the creek. That's pretty much a textbook jump of the creek right there. And then we are pulling back, and this to me is a very important area of basically last point of support. We see in the signal of strength, we see that after the jump, the signal of strength will generally come back to retest that creek that can be drawn with a curvy line or a bit of a trend line. And that's what we're seeing here. And this is where it's really important. This is, to me, the most important point of a Wyckoff pattern is right here. Because if this holds and does establish a higher low, that provides the signal of strength, the point number 11, where is the best place to enter according to Wyckoff. And then if we create a higher high and then another higher low, that would be the final confirmation, kind of like I was talking about from a horizontal and consensio point of view. If we confirm this higher low with another higher high, then that's really the final confirmation that I'm looking for, that we're going to then enter the markup phase. So hopefully that was visible to everyone, but I do think this is a good example of a Wyckoff pattern. So just a little bit of a rebuttal to your bearish stand, or not just the points that you brought up. So I found that interesting.
Very interesting. Terrific. Well, why don't we move on to the stock market? I was disappointed. I was ready to consider buying some more back into the market, just because of the momentum we've been seeing. So I am going to pull up an S&P chart.
Great.
I will do that one and that one and that one. And then that's the Bitcoin. Let me just pull up some indexes starting with the S&P. And this is a very interesting chart. We talked about it yesterday. Some people in our Telegram are very interested in the Selgin sell signal that we've got off of a big 7, which will also be a 7 on the sequential right now. But this is a 7, 6, 5, 4, 3, 2, 1. For those that have taken the Selgin webinar. And that has got me nervous. I like the drop that we've had off of this top, but this bar off of the long-term moving average and turning the long-term moving average up at even a greater angle after it had formed this big bowl. All we needed to do a week and a half ago is to break down through that, and we could be on a run. Now, what happens with the Selgin top is you get basically 5 free weeks after the top, 1, 2, 3, 4, 5, which takes you right down to this lowest close before this stops. There's a stop up here before the stops begin angling down. And some people are drawing those now in our Telegram channel. And I thought, oh, good, we're just about to break up through the stops. So all this action basically was taking place today. And if we go on a daily chart, we started off awfully nicely and ran up above what was kind of a wild move yesterday, moving up and then coming back down, and blew right through the top of that. And now we just closed down here at 28.85. So what this all means is, on a weekly basis, we are still in a downtrend, and that downtrend could begin to accelerate. And all that tells me is I've got to wait till Friday. I really want to move up to new highs. I really thought we had a good shot at doing it because of this candle. This candle basically means we went for a full week without any negative days in between. And it's about the strongest candle. There's some negative candles that are bigger during this huge drop, and this one back here. But this is just a remarkable candle ending last week. And then for it to peter out after just a couple of days, and it's too early to say that. We're only on a a 5. We do have a price flip because of this action today to a green 1. So I'm still holding out some hope. I just want to quickly go through some other long-term charts. This is the Dow Jones Industrials. And the important thing here is it did not get to a new high. And everything else looks about the same. But what it means is that we're not working on a Selgin 7, which could mean that we could continue going up high enough to confirm, which would mean that the S&P would be going up too, and we would probably break out above the stops above the S&P 500. And I don't want to get too deep into this, but I just wanted to point out that not all indexes are in exactly the same point. Now, here's another one that is. This is the NASDAQ Composite. Exact same formation, 7, 6, 5, 4, 3, 2, and a 1. Very rare. And this is a very big one because from point to point, we're talking about from December of 2017 when this very conspicuously started, and then big widening moves, bigger and bigger and bigger. That is the perfect definition of a broadening top or a megaphone pattern. And what's important is to get above that final high. You can see why it's so difficult to do it, because you first have got to come all the way down and establish a new low in the sequence. And then you've got to run all the way back up. How many times have you seen a V of this size in that short a period of time? So it's something that I am watching. We are 50% in, 50% out of the market. I'd like to be 100% in the market, but I am very concerned about what I'm showing you right now. This is the NASDAQ 100, and it's precisely the same as the composite NASDAQ. We actually got a little bit higher relative to the peak, but the same formation playing out. And we actually had this great gap between last week and this week. And I thought, oh boy, here we go. And we ran way up here without closing this gap, which could be a breakaway gap to the upside, but we've got to wait till the week is over. I'd prefer if we didn't close it, but right now, this is not looking like the kind of candle you want to see, even though it's only 2 days in and we've got a long ways to go. So this is a stutter step for me in what I was planning to do and hoping to do on a long-term basis, but I am not ready to do it. Notice that one of the things that happened is after running up well above the declining intermediate term moving average, we came all the way back down and just slightly above it now, leaving this very long wick. Now, the short term is still going to break through, but this is going to not help us turn the intermediate term up. So we need more action. We need more continuation. I'm not projecting that it's going to happen or not happen, calling it as I see it right now. I wanted to take a look at a couple of other indexes, though, on a worldwide basis, because I still believe that everything is tied together following the U.S. market. And this is the Nikkei, which got up to 24,500 back in late last year, petered out about the 24,000 level before that. But you see, these are the all-time highs on the Nikkei relative to the last 20 years. But if I go on to a monthly chart, remember that this is the actual high, and that's 1989. This was the end of a hyperwave, and this shows how difficult it sometimes is to recover from a broken hyperwave. Even though we have run up from the 6,000 level to 24,000, that's a great bull market, and it's occurred over a 7-year period. But to me, we've got a lot of work to do in a country and an economy and an index that a full 30 years after the break of these highs, we are still 30% or more lower than we were 30 years ago. Keep that in mind about Japan, which is the third largest economy in the world. And this is the UK. And one of the nice things about the UK is, besides going through this very difficult Brexit proposition, is still hanging around. You know, at 7,400, all-time highs at 7,800 on a closing basis. It's still in there. Now, it too has, to me, a pretty clear, this is a monthly chart, 5 top up here, which has caused this tremendous drop from 78 all the way down to 66 before this next move up, which also means that if we can get up a little bit higher, we will be facing a 7 up here, and 7, 6, 5, 4, 3, 2. Anyway, I won't go through that now, but this is looking very hyperwave-ish to me over here also. So I just wanted to go over those very quickly. I will jump back to the S&P chart unless, Socrates, you wanted to pull up your own S&P chart.
Your S&P chart will work just fine. I might pull up a different one if we've got time. If you could take that back to the daily.
Yep, got it.
So yeah, right there is kind of what we're seeing, what I've been talking about the last couple of days, where the price is going against the moving averages and how it really just does not like to do that. And we'll see the moving averages act as if it's a magnet until that is resolved. And what do I mean by that? The moving averages are in a bearish crossover. There is the short-term MA is below the long-term MA, and also the long-term MA is trending down significantly. That's rolled over and trending down. So that by itself is price moving against the MAs, and by itself, I would expect just that long-term MA to act as a bit of a magnet. As long as price is above it and it is significantly angled down, which it is right now, we see that as in a significant downward angle. Price above a downward trending MA is price moving against the MA, and it just does not like to do that. And it will tend to not be able to maintain those prices for very long. And that long MA should act as a magnet and pull the price back to it to resolve that difference. And if support holds up, then the MA will flatten and will turn up, and we'll get a bullish crossover with the medium term. And then it would be comfortable for the price to continue progressing. It wouldn't be going against the moving averages. It would be going with them. Think about how things go down the path of least resistance. To me, right now, the path of least resistance for this price movement is back down to about 2860, 2840. because we are above those MAs, which are in a bearish crossover and also have a bearish trend. So in the last couple of days, we've been looking at it more as a bullish kind of indicator when the price was below bullish MAs and considering that a buy signal. Whereas here, I'm looking at this as this price really needs to pull back and needs to cool off. And this is when you can get the perfect pull back and into a golden cross. If price does now pull back towards that area that I'm talking about, 2850 or so, pulls back into that long MA, the long MA flattens and the short MA crosses, that gives you your ideal pull back and into a golden cross. So that's kind of what I could see, I think, is the most likely thing to happen from here, just based on this daily moving averages, is that we're going to need to pull back to 2850. And because that shorter term, that the medium MA is trending up so sharply, I mean, that thing is trending up as much as it really could be. I would expect that to smash right through the long term, giving us that buy signal, and that would get the market into a position where now it's ready to continue progressing forward. Whereas right now, I just don't think it is, as long as the price is moving against the moving averages.
Very good. I like that.
And one thing that I can show on a chart that I have for the Japanese stock market, the Nikkei 225, I'll pull that up real quickly. This won't take long. So here's something that I've been keeping my eye on for a while on this monthly chart. We've got this area of horizontal resistance. This has been the most important. That was the most important number. Kind of looks something like gold does at 1370 or so, 1350, where it resists, sharply comes back, resists, and then finally, looks like I'm not on screen share. Okay, there we go. Okay, so now it resists again, pulls back, but now higher low, and kind of get a bit of a cup and handle type of situation, and then it breaks through. And now it has started to pull back. So when it broke through here, I became very bullish, thinking that, okay, now we're through this major area of horizontal. I didn't expect this thing to do too much. Next area I was looking at was right up in here at the 2659 or so. And that hasn't quite happened. Instead, we have started to see the moving averages start to roll over and start to go bearish. We saw on Tyler's chart that they were really starting to roll over on the weekly, but the monthly is still looking real good. So here on the weekly, we noticed this 50 was acting as support. Now it's broken down, bearish crossovers, trending down. Looks like this is starting to roll over on the weekly, but the monthly paints a much different picture. Look at this 50 on the monthly. Once we broke above it, we really took off. We did not, we closed below it once, but barely, and then quickly rebounded. Same thing happened here. So this monthly is looking quite bullish to me, and it's all going to come down to this trend line. And this 50-month moving average will also be very important to me. But as long as we're able to continue closing above this trend line, I think that the Nikkei 225 is bullish. And this right here is very interesting to me. Seeing right here, this would be a Bill Williams fractal. Anybody that follows me on TradingView might have read my post. It talks about buying trend lines that are in line with fractals. So when you get a fractal on a trend line, for me, that's a very interesting buying opportunity. Reason being is this can be a very reliable stop loss, kind of like we saw in the 4-hour chart with Bitcoin. Those fractals are very reliable stop losses. And even when price comes down and tries to take out that area, even for a moment, it really, really struggles to do it. And when the fractals are working, you would see the price continue to create support above and continue to move higher. So that is a fractal there. And now I would expect that to be a safe stop loss, and where I would think this is actually a very intriguing buying opportunity, because we're testing this trend line and we're close to this fractal. And then the last thing that I was just going to show is that I really like to set alerts on my trend lines. When there's a long-term trend line here, it's been here for 6 years or so. This is a very significant boundary for me, and is also very well defined. There isn't much room to have to adjust this. If this thing breaks down, then that's going to be a very, very important signal for me, and would be a very good selling opportunity as far as I'm concerned. So instead of necessarily having to check this chart every single day, what I'm going to do is set an alert on it. So what you can see is right up in here, up on the drawing. If you click the trend line, now it's highlighted. Now we come up here and we see that it's blue. We can change the color. We can make it thicker. And then what we can do here is click on this right here to add an alert. And then we say crossing this trend line, do we want it to be on a monthly basis? If it's a 1 month cross, then we have the monthly chart pulled up. And then we would say, do you want to wait for the close, or just a cross is going to be good? I like waiting for the close. So now I've got this trend line. If the monthly candle closes below this trend line on the NI225, then, and let's make sure it's crossing down. That's kind of redundant. It should know. So that will give me an alert. I'm going to go ahead and extend the expiration and let me know to notify me everywhere. I want it to play a sound, send me an email, show me a pop-up. So as soon as that happens, I know that this very important area has broken down. So I go ahead and create that. And now I've got an alert. I don't have to worry about waiting. We see this little clock down here that's now a part of this trend line that tells me that alert is valid. So a very important area for me on the Japanese stock market that I wanted to share very quickly.
Terrific. Very good. And if you want to pull up a gold chart, we'll take a quick look at that. We're running into the 5 o'clock hour, but if you want to get started, I haven't looked at the gold chart today. I saw it take a big pullback yesterday, a little pullback a little bit earlier, and I've got my chart if you want me to pull that up.
All right, I've got mine here.
Okay, good.
Want to pull yours up? We can do that too, not a problem. Let me make sure.
Go ahead. Let's use that. I like that one.
Okay. So yeah, I definitely really like this trend line here that we've been finding support from, and also this guy here that looks like we're breaking out. To me, this long-term picture is looking awfully bullish, and it doesn't really start to change until we zoom in. So that's something that I want to keep in mind, is even if the shorter term is starting to look bearish, I want to keep this picture in mind, because seeing support, strong support off of this trend line for multiple years, well over a decade, and then breaking through this trend line, which was well established for about 7 years, and supporting a throwback, and now getting what appears to be what will be a monthly fractal right in here. If this thing just closes above here, now we get a monthly fractal after this trend line retest. So to me, this long-term picture is very interesting from a bullish perspective. So now I don't want to be too, I want to be careful about zooming in too much, because we're right now in a very tumultuous environment, and I think it's not good to be, becoming too married to a short-term disposition. So I am still seeing here a nice cup and handle that's occurring. As long as this is continuing to support above the 1315 area or so, that's still a really nice cup and handle. Might get a second handle in there, which would be just perfectly fine with me. Going to go ahead and throw on the Ichimoku cloud to see what it's telling us, and it is in a fully bullish posture. We've got the price above the cloud. We've got the price, the Tenkan Sen above the Kijun Sen, with the price above both of them, with a bullish Kumo twist. So the weekly cloud is a very powerful way for me to identify trend. So it is saying this is a bull trend, which is very intriguing to me, being that this recently changed, recent Kumo twist, pretty recent Kumo breakout, and coming right after a trend line break. So seeing a powerful trend identifier reverse or flip after breaking a boundary line is very important confirmation to me, and something that I am very intrigued with. So if we remember, the 50 and the 200 recently made a golden cross, pulled back into it beautifully, and supported that right after the trend line breakthrough. So that's in agreement. So both of my most powerful trend identifiers are saying this is a bull trend, and the trend line breakthrough agrees. So in that case, I want to look at the shorter term trends just to see, are they in agreement? If everything's bullish, then it's interesting to go long. And if it's not, then it's usually best to wait. So here we do see bullish on the daily, pulling back after this rally at resistance. And so my long term and medium term is bullish, and my short term is bullish. So I am across the board bullish here. I'm not seeing any entries right now per se. The entries would have been on this pullback to the 200-week EMAs after breaking through the trend line, and maybe would have been back in here as we started to get some bullish confirmation in this area. So right now the price is at resistance and pulling back, and is not an attractive buy to me. However, I am bullish, and I do want to be long. I am long gold, and seeing that the short, medium, and long-term trends showing bullish is very interesting to me, despite this recent little pullback. I'm not too concerned about this at all, especially since it's from a major area of horizontal resistance, and I will be expecting support to hold in about the 1310 to 1315 area. That's what I'd be wanting to see in terms of if this is really going to continue in a bullish manner. I want to see a nice higher low established somewhere in that area. So that's what I'm looking at there. What do you got for us, Tyler?
We can stay on this chart. Maybe go to the weekly if you don't mind. I'm not a buyer until we break above 1380 on a weekly closing basis, because of the previous four tops, or approximately four tops at the 1360 to 1380 level. But that's the only thing keeping me from buying. Everything else that Socrates said on almost all time frames is exactly what I'm seeing. And this is very, very important for me because of the implications it has in the macroeconomic scheme of things. Socrates and I think, disagree about the ability for Bitcoin and gold to move higher together, particularly in a big way, not in a small or intermediate or even long term, but I mean in a substantial way. If we're starting a mega trend, and remember, in my mind, a mega trend is us moving from this $1,300 area up to $10 or $15 or $20,000. Yeah, it would be great. Anything less than that, up to the old highs at 1900, would be fabulous. I think a break of the 1380, 1400 level gets us to 1600 with no trouble. Then maybe a little bit of a pause, but that's a big move, you know. And so I'm a buyer above 1380 to 1400, kind of that zone that we've got on this chart. That's what we need to clear. Until we do that, I think there's too much risk to the downside, only because see where the very long-term trend line is coming in. It's getting closer and closer and closer. And at some point, it's at about 1230, 1240 now. At some point, it's going to run into that overhead resistance. And it could still break either way on a long-term basis. I think on an intermediate-term basis, it's clearly bullish, and short-term is clearly bullish. But I'm thinking a little bigger here in terms of where this thing could go. On the flip side is what we're seeing with Bitcoin, which is in a very strong intermediate term bull market. And to me, that's fun and interesting, but I'm not a buyer of it in a big way until it's clear that we can clear the 20,000. And it's not going to take up to 20,000 to get me clear on that. I think if we can get above 10,000, it's going to be very difficult to hold it back from new highs. And after we hit new highs, I think it's I don't want to say it's a moonshot because others have used that before me, but it could be pretty spectacular. I think gold could be pretty spectacular. I think Bitcoin could be pretty spectacular. I don't think they both can be at the same time. I'm still working on an article that explains how that might occur, and I do believe that, but it is pretty complex in terms of just the real politic about who would be supportive of such a thing. Whenever I get that done, we'll go into a lot more analysis on that. And then finally, we've looked at the stock market, which cannot be ignored in the big scheme of things. Because if we can blow through the highs from earlier this year, we've got much higher targets. And if we have much higher targets, that means world economy is doing pretty darn well, not only the US stock market and other markets, but it means that a lot of political things are going to happen and a lot of economic things. And in both those cases, I don't see gold and or Bitcoin keeping up with it. So a stutter step is what we called this. I think all three of these markets did exactly that in a very short time frame. We're not talking about anything big here. We're just talking about what looked like was about happening has slowed down, and we'll see what happens after here. So with all of that, thank you, Socrates, very much. Thank you all for listening to us. We are going to start, we will continue doing daily shows, but Socrates and I, we are working on a schedule so that on certain days we'll be talking about certain things. So you can count on Mondays, certain things will be talked about, Tuesdays, Wednesdays, Thursday, Friday. We're going to try to keep throwing in Sundays at 8 o'clock, and that is really the Bitcoin hour more than anything else, because we can sneak it in at the weekly close. We haven't worked that schedule out, but we are working on it. Look forward to it. I think it'll be great for the viewers, and it'll make our life a lot easier about not always talking about only the crypto market and or only Bitcoin, the stocks and gold, but all the other markets that mean a lot to a lot of people, including the altcoins, which is a favorite of trading for Socrates, not on a fundamental point of view, but from a trading point of view. And with that, I will say goodbye and thank you, Socrates. Any last words?
I guess just last thing will be, it sounds like we will not have a show tomorrow. You'll be on the road driving all day. So tomorrow we'll be off, but after that, it sounds like you'll have your laptop with you on the road. We'll be able to keep up with the schedule, and
absolutely.
So keep an eye out for that. So yeah, appreciate everybody tuning in. We'll miss you tomorrow, but should be back at it moving forward on Thursday. So
terrific,
and have a safe trip.
Great, thank you very much. Thank you, everybody.
See you.
Bye.
Bye.
Bye-bye.